So have you ever found yourself celebrating a big win in Forex trading only to lose it all on the next trade? Are you struggling to protect your hard-earned capital while chasing profits in the unpredictable world of Forex? In this video brought to you by CoinLenity, we will explore essential risk management strategies that not only help you safeguard your investments, but also set you up for long-term success in trading. CoinLenity is a leading online edtech company dedicated to professionalizing financial education. Our mission is to make finance accessible and understandable for all, regardless of background or experience, through comprehensive courses on forex, stocks, investing, money management, and financial planning. We empower our clients with the knowledge and confidence to navigate the financial world with ease. In this video lesson, we are going to be talking about risk management strategies for Forex. But before we dive into this topic, I will need you to take a little bit of your time to like, subscribe to this channel, and also hit the notification button so that you can get notified whenever we upload new educational content. Do remember that you can earn reward prizes like cash rewards, trading bonuses, and personalized trading plan consultation with a mentor, and so on by engaging with our educational content. So the more you engage with our educational content, the more you can earn reward prizes. So to learn more about our reward program, you can click on the link below in the description area. So moving on to today's topic, which is risk management strategies. So risk management is crucial in forex trading due to the high volatility and leverage involved in forex trading. Effective strategies help traders minimize potential losses and maximize profitability over time. In this video lesson, we are going to be talking about three risk management strategies in forex, which are number one, position sizing, number two, stop loss and take profit orders, and number three, risk reward ratios. Now, in this section of the video, we are going to be going more deeper into the three risk management strategies that I mentioned in the previous section of this video. I mentioned number one, position sizing, number two, take profit and stop loss orders, then number three, risk reward ratios. So, we are going to talk about position sizing first. Now, as you can see clearly on this chart, we are in a bullish trend. Why do I say that? Because we are creating higher highs and higher lows and higher highs. So, let's say I'm about to take a bullish trade on this currency pair. Now, if I'm going to take that bullish trade, it is going to be from a support zone. Now, we have a support zone here in form of an order block. So let me mark that out. Now, this is the order block, which is acting as a support zone here. So let's say I'm to take a buy trade here, right? So let me just take my my position to and mark that out. So we are going to be, let's say I'm just taking a buy setup, this buy setup right here. Now, before taking this buy setup, I'll have to do something called position sizing. Now, position sizing is a process whereby you need to calculate the appropriate lot size to use on each and every trade you take. Now, take for instance, I have a $10,000 account, and I decide to risk 1% of that account on every trade that I take. 1% of $10,000 is probably $100, right? So I'll be risking $100 on each trade. So what I need to do here is I need to take note of my stop loss value. So let's take the measuring tool and measure from my entry price to my stop loss area. Now that should give me about 36 pips or so. So my stop loss value for this trade is 36 pips. Now to calculate this lot size, you can use lot size calculators. You can find them by searching on Google, or you can go to this website that I'll be showing you in this video. Now what you just need to do is go to your browser and type in this website. So just go to cashbackforex.com. Now just click enter and let that load up. So once the page loads up, that is once the website loads up, it brings you to this home page. Now the next thing you need to do is go to tools. So look for tools here and select position size and risk calculator and allow that to load. Once it loads up, it will bring you to this page. As you can see here, we have the position size calculator here. So how do you use this position size calculator? Number one, you need to select the currency pair that you want to trade. Then number two, you need to impute your account balance. As you can see, the account balance here is already $10,000. So I don't need to change that because the example I'm talking about is me having a $10,000 account. So for the stop loss value is 36 pips. So let me change the stop loss value to 36. Then I want to risk $100 of, that is 1% of $10,000, which is $100. So you can type that in here. If you want to risk like 2%, which is $200 of, that is $200, because 2% of $10,000 is $200. You can impute that here also. Now once you're done, the next thing you need to do is to click on calculate here. That is, you come down to this area where you see calculate and click on calculate. Now calculating that will give you the lot size you are supposed to use for that trade. So as you can see, the lot size here is 0.246. Now on your trading view, you can only input think the lot size there only permits you to input just after the decimal points, you can input two numbers. So what you need to input on your MetaTrader platform, that is on your broker platform, is 0.24 to get into this trade. Now, imputing this means that you are risking 1% of this account. So as you can see, we are once we wanted to risk on this account is $100. So imputing this lot size means that you are going to be risking 1% of $10,000 on the USD CHF trade. That is this USD CHF trade that we are talking about. Now, to learn more basic concepts like this, you can also take up our 5 days free training. Now, this training contains the basic, more about the basic concepts of forex trading. So, if you want to take this 5 day free training, you can click on the link below in the description area to take the 5 day free training. Now, on to the next one, which is stop loss orders and take profit orders. Now, as you well know, before you take a trade, you need to set your stop loss orders and take profit orders. Or after you get into the trade, you can set those orders. Now, how do those stop loss and take profit orders help us? Now, the stop loss order helps you close trades when it gets to a specific loss level. So, you know that this market is very volatile and it can, so many unexpected movements can happen. Let's say we have, what do we call it? We have a fundamental event happening, a high impact fundamental event occurring in the market. Now, if you don't set a stop loss, and let's say you're on this trade and the high impact event hits the market, and let's say the trade goes against you, if you don't have a stop loss order set on that trade, you're going to be losing more than this $100 that you wanted to initially risk on that trade. So that is how the stop loss orders helps to manage risk. Setting the stop loss orders helps you manage risk, especially in this in times of uncertainty in the forex market. Let's say when we have high impact news hitting the market, these stop loss orders can help you protect your capital. And also the take profit orders helps you do that also. So now this take profit orders closes trades in profit when it gets to that specific level. So if you don't have a take profit order set on trades, let's say you the market reaches that your take profit level, and let's say you are not on the charts to close that position, and after reaching there, price retraces and hits your stop loss. Now, a winning trade has turned to a losing trade because you did not initiate or you didn't set a take profit order on your trade. This is why these orders are very, 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 very important because they help you manage risk. You don't need to be there in front of your screen to close the trades. The trades will automatically close when it gets to this specified level. Now, the last one we are going to be talking about is risk reward ratio. Now, as you all know, when getting into trades, we should already have a risk reward ratio in mind. Now, what are risk reward ratios? Uh, Risk reward ratios is essentially how much you are risking plus how much you are aiming to gain on each and every particular trade. So, for most traders, they practice they want to do risk to reward ratios, which means that for every $1 that they are risking in the market, they are aiming to gain $2. So let's say if I was going for a 1 to 2 risk to reward ratio on this particular currency pair, that is on this particular trade, that means that if I'm risking $100, I'm aiming to get back $200 of profit on this trade. So we have other risk to reward ratios. We have 1 to 1, 1 to 3, 1 to 4, and so on and so forth. 1 to 1 means that for every $100 you are risking, that is you are gaining back $100 profit. 1 to 3, as it implies, means that for every $100 you are risking, you are aiming to get $300 back in profit on that trade. So that is what ratios actually mean in the market. Now, this risk reward ratios helps you manage trade. So once you have your determined risk reward ratios, so let's say for example, I get into this trade and I'm aiming for a risk reward ratio of 1 to 2. Let's look for an area that will give us that risk reward ratio we are looking for. So my entry is here, my stop loss is here. So I'm going for times 2 of 36 pips, because my stop loss area, that is my stop loss value from my entry point, is 36 pips. So I have to look for 2 times of 36 pips to actually get 1 to 2. So this is around the area. Now this is, I think, this is 72 pips or so. So that should give me 1 to 2. Around that should give me, around this area, this is where I should get a risk reward ratio of 1 to 2. So I will set my take profit order here and my stop loss order here. So once the market gets to this area, it will automatically close this trade with a risk reward ratio of 1 to 2 in my favor. So guys, to learn more advanced concepts that can pair up with these basic concepts to trade the forex market, you can take up any of our courses over here at CoinLearning. So to take any of these courses, you can click on the link below in the description area to take any of our courses. These courses are well documented, and they are well structured in a way that can take you from a beginner forex trader to an advanced forex trader. So you can do well to check the link in the description area to take up any of our courses over here at CoinLearning. So guys, on that note, we've come to the end of this educational content. Now, do remember to like, subscribe, and hit the notification button so that you can get notified whenever we post or whenever we upload educational content like this. So guys, that will be all for now. I will see you all in the next video.
Learn and earn with CoinLearning. Ready to boost your knowledge and get rewarded? With CoinLearning, every minute you spend learning turns into real rewards. Here's how it works. 1. Sign up or log in to your account. 2. Head over to the Rewards tab in your personal learning area. 3. Watch our free video tutorials and earn CoinLearning tokens for every minute you spend learning. The more you watch, the more tokens you collect, and those tokens can be redeemed for amazing rewards like gift vouchers, trading bonuses, cash rewards, and more. Don't miss out. Start your learning journey with CoinLearning today and make every lesson count.